All right, welcome everyone. We are going to do a special video today on some of the more overlooked and unknown metrics on sentiment. They may be overlooked and unknown because they're relatively new, but perhaps you have not explored them yet. They may be simply unknown because we have not personally gone over them fully and gone and touched on them much in previous videos or insights. But today we're going to do so with some of the metrics that I've put some increased attention on myself in some of my analysis. And I recommend you guys do too if you're interested in the same kind of uh, alpha and market future uh, analysis that we can kind of look through. And I think these have a lot of importance. So I'm just going to jump right into the first one here, which is RSI. And many of you may know RSI from the technical trading sphere. It's been around, multiple decades at this point, and many technical traders use them to measure the speed and the volatility of price gains and price falls to kind of see just how overinflated or underinflated a price is simply based on how quickly the price has moved up compared to what the expected rate of that move up is supposed to be. So, for example, you can see that the RSI here in late September went way up high in a pretty unassuming manner, and it was due to the fact that we had this big price push over the previous month, where Maker, which I'm going to use as an example for this video, gained a little over 50% during that time. So the RSI said, let's pump the brakes a little bit. It looks like this is pretty unusual. Prices can always go up, but it's not usually this fast. There's probably going to be a cool down period. And sure enough, about a day after this big spike happened, we see this top. Prices do calm down, and look at how the RSI falls significantly down to about 33, 34. You can see the numbers in the top left as I'm hovering here. Um, and once it did fall down, that's when things bounced and it went right back up. You can see the RSI poking out back behind this price candle here. And then again, it hit a top once it was in this danger zone area. These are more arbitrary lines, but I kind of put, if you're going to have a rule of thumb for when the RSI is indicating prices are getting a little inflated, you can look at something like 70 for the 1 day RSI as a bit of a danger zone, or anything below 40 as an opportunity zone. Some might argue it's more like 30 to 35. I think anything under 40 in this case, as you can see here, and even here when things bounced right after it went below these lines, that's a pretty good rule of thumb. But you can, of course, assess it yourself and find what is best for you. What you can be confident in is lower is better, higher is worse when it comes to price uh, futures from wherever it is at that point. And right now, for Maker, for example, not an investment advice by any means, but if you're interested in something that at least is pointing to being historically bullish according to RSI, Maker appears to be one of those candidates, which is also why I kind of found this to be an interesting asset as an example to use. So, long story short, you can see by this rocket ship, which I should have made much bigger. Actually, that's the biggest it goes. This is when prices tend to go up, when RSI is below 40, and prices tend to be not so great when RSI is above 70 for the RSI 1 day. Moving on to the next metric here. This is a metric many of you are familiar with. It's the MVRV, market value to realized value. But in this case, what I did was I combined the 30-day MVRV and the 365-day MVRV into one so that we have kind of a split between analysis on more of a short swing tradey type of time frame, as well as more of a long-term time frame that isn't going too far into like a historic, all-time 5 year look back or anything like that. And then next up here, we've got the supply held by top addresses. And this is a really interesting one. You can actually open the metric and look at the amount of top holders up to about 200 that you'd like to analyze and see what the total amount of coins are held in those combined wallets. In this case, we can see right now, Maker's top 200 wallets have about 818,000 coins. Obviously, that's a massive amount. We could edit that and maybe just look at the top 10, and they hold 438,000. So interesting to find that out. That means that the top 10 actually hold more than half of the next 190, if you can believe that. And that's pretty typical. And there's a few reasons for Maker in particular having that kind of pattern. But looking at this in terms of alpha, every coin is a bit different. In this case, it looks like Maker's amount of supply held actually kind of goes down as prices go up. There's a bit of counterintuitiveness to this, where you'll see them taking profit as prices rise, then they'll kind of flatten out. You'll see sudden drops like this that sometimes can precede a big move in either direction. You can see they dropped big time right before the rise, and then rose right before the drop. So I would fathom that a lot of these are actually exchange addresses, and you could actually look at things a little more granular and say, let's see how the top exchange addresses are doing right here. And then we'll say, how are the top non-exchange addresses doing, and add them here. Take that off. And now you can actually see, for example, just the top 10 exchange addresses here in red and top 10 non-exchange addresses in blue. And you could do the same thing, look at the top 200 for each instead. And you can actually get some pretty good understanding of how big wallets are moving. I tend to like the non-exchange addresses more. You can clearly see, at least starting about here, you can see that there's some alpha where they're dropping down, they move up, and then prices kind of move up. They're climbing, and then right here in mid to late October, they start to drop as prices drop. But sometimes it could be cool to actually look at the ratio between the exchange and non-exchange addresses. And obviously, when more coins move to exchanges, there's a bigger risk of a sell-off, and prices tend to have a big drop-off more often. So something to consider there. There's a ton of customization and of course, several different assets that all have different behaviors depending on what kinds of wallets compile these top 200 on or off exchanges. And on a related note to the above chart, we can actually look at the top addresses and see how much each of them are holding. In this case, the governance token, or one of the two governance tokens that make up the biggest supply held, they hold 168.9K Maker coins, give or take, worth about $231.6 million. And that makes up about 17.3% of the supply. So almost a fifth of Maker's tokens are in this wallet. And you could always, look it up on the Explorer and see exactly how they behave over time. You can see the one right below it is the other governance token. And it's not quite as large, obviously, but still holds about 6% of the supply and has about $80.7 million worth of coins. And this is like an actual, what appears to be an organic whale that just has a ton of coins worth $33.25 million and almost 5% of the supply. So could be a founder address. I would not be an expert on that, but I'm sure with a little research, it might be able to be figured out. So if you're interested in perhaps checking out specific wallets, seeing if one of them has a potential alpha link to where prices move next, that can be a huge, huge benefit to making profitable trading decisions. Shadowing whales, never the worst idea if you find one that seems to know what it's doing and makes a lot of key timed buy and sell decisions. Now, another one I want to look at, check this out. I'm going to add price back really quick. So this is, as I missed, let me try that one more time. There we go. So this is the amount of total addresses that have more than 0 Maker coins in them. Uh, Essentially, if a wallet completely liquidates all of their Maker, they get wiped off of this line, and it's a subtraction of 1 from the existing amount of wallets. Yes, the wallet still exists somewhere and can have coins be put into them again, but for the purpose of counting uh, addresses that have a positive amount of coins in them, this is a great way to look at it. And generally speaking, when you see the amount of wallets drop, that can actually be a good sign because it's typically going to be smallish addresses that are capitulating, giving up on the asset, and those coins are being absorbed by the bigger wallets out there. Not always the case. Sometimes you can do a little bit of, you know, back testing to make sure when you see a big drop like this, that is the case. In this case, it was kind of the smallish addresses, not micro, but like $300 to $1,300 in that range that were dropping a lot of wallets at this time. And then prices absolutely just blew up right after, partly just due to the fact that crypto markets were having a big bull run during this time. But Maker in particular had a big run up in late June that could have been contributed to because of this drop. A good way to kind of use this is when markets flatten out, or I'm sorry, when the amount of wallets flatten out, that's a sign that there's not much enthusiasm from the tiny addresses, and prices can actually climb without a lot of resistance if whales and sharks are, of course, holding on tight. When they're rising a lot, this is actually the sign of a lot of FOMO, and you can see they were just really climbing in late October and early November, all the way to like, I guess, late November before there was a little blip here. But I think that there is some merit to using this as kind of a counter indicator where drops in the overall amount of wallets that have more than 0 coins is actually a signal that prices can rally on a more frequent basis. All right. This one, last but not least, is a brand new metric, or pair of metrics, I should say, that was introduced just in the past 24 hours. They are the total supply and profit and percentage of total supply and profit. In this case, they're fluctuating identically because there hasn't really been a change in the supply being introduced on the Maker network in recent times. But long story short, it's a great way to actually identify when to potentially sell high or buy low, because it's easier said than done to just say buy low, sell high when you don't know what those lows and highs are. Well, this helps you figure it out. And if I zoom out a little, let's actually just do like 2 years worth. We can see that when the supply, total of supply and profit tends to get high, let's call it just arbitrarily anything above maybe 65%, and then anything below something around, we'll say 30%. These are usually the opportunities where you're going to see a lot of bounces, because supply and profit implies that you're going to have kind of at any given time, there's going to be some supply that's profiting from the time that it was first minted, and other times you're going to see coins that are really just dropping off a cliff, and there needs to be a healthy mix in order for the coin to have a healthy, sustained ecosystem. And generally, these coins are held by humans and not just exchanges. And when it gets too high, it kind of is similar to what you see with MVRV, where there's just too much profit in a zero-sum game or not enough profit in a zero-sum game. And that is why these are typically the times where it can be a great time to buy, because there's so little profit when it comes to the portions of the supply on Maker. And these are the times where there's probably a little too much, and you should be hesitant to add onto your position or open a new position, knowing that so much of the supply is already at a higher value compared to when the supply first existed. I also wrote an article just yesterday about it, and I encourage you to check it out. It just explains this a little more. This is just an example with Bitcoin, where I used similar, opportunity, mid-range, and uh, danger zones. And you can see quite clearly when those danger zones tend to form and when those opportunity zones form. And you could easily find uh, similar patterns to what I showed with Maker and Bitcoin here. And I recommend you check out the article. It's free to check out on insights.santiment.net. As far as this entire template, I made it public. If you just go to app.santiment.net, you will see the chart in our new dashboard right here as overlooked metrics. You can feel free to use it. And let me know what you think, guys. I hope this was helpful, and I will talk to you soon.